Welcome everybody. Welcome Alessandra to the loft in our studio. It's your first participation at the ESG webinars.
As a participant, I used to, but welcome everyone, and I'm really happy to be here.
And we have Don Giselle, the CEO of Holland Fintech, with us. Don, do you want to say a few words?
No, definitely. It's great to see you together again. In any case, I should have known about this. I would have happily driven 8 hours to join you in Luxembourg, but next time a heads up a bit earlier. No, it's really great that we can get together. So I'm looking forward as well to extend this series into a more in-presence sequence on the collaboration between Belgium, Luxembourg, and the Netherlands, I think. Yeah, very much welcome also on behalf of Holland Fintech. It's great that we're able to wrap up the ESG series of events with the G, very often misinterpreted or not getting the attention it should. So I hope that we can correct that with the session today. And I'm really looking forward to hearing from all the speakers and the discussion afterwards. I'll give it back to you, Alex and Alessandra.
Thank you, Don. As you mentioned, I mean, it's one of the last series of the ESG series. Is the last session. It's about the G. We had a great session about environment and social impact, but the G, most people don't know about it, and it's always focused on saving the planet, equality, inclusion. But what about the governance? And when you talk with most people, they have no clue what's governance. So we decided to have a full session on what is good governance, how to implement good governance, and more importantly, in our domain, how to leverage technology to have a better governance. And we have 5 amazing speakers as a lineup today. Do you want to add something, Alessandra?
Not really. I'm really looking forward to hearing what they have to say, actually.
Good. So guys, I'm just going to share my screen briefly. Let me just use that. Let me know if you see my screen. Nobody answered. I guess it's, oh, yes.
You're great.
Awesome.
Good to go.
Good. As I said, 5 speakers. We're going to talk about governance in general, but also about technology and how to leverage it. And as you can see, those speakers represent the 3 regions. So Netherlands, Belgium, and Luxembourg. I'm not going to go through the whole agenda. The idea is to have as much interaction as possible. So if you have questions, please drop them on the chat. Happy to or even ask questions directly to the speakers, and we give you the mic after each session. So without further ado, the first, Wouter Dont.
Wouter Dont.
Wouter Dont. It's your
from
member.
Lighthouse, yes.
He's from Belgium.
Yes, now a member of our community, compliance consultant and also owner at Lighthouse. And he will be talking about supervisory expectations with regard to governance. So Wouter, the floor is yours.
What I have to say is maybe not the most exciting or sexy session. So let's see what we can learn from it. Wouter?
Yes. Good afternoon. While I'm presenting my my slides here, good afternoon to all of you. Welcome to this session on governance, which is the last one of the ESG. And before we enter into the governance aspect as such, I would like still show this big picture, because I don't think we can forget about this work, this piece of work that has been done for the last 30 years, which is the UN Sustainability Development Goals. And when we talk about governance,
you are not on the right slide. You should go on the slide 2 and
I think you see this now, right now?
We see the slide 6.
Ah, okay, that's weird.
It's a beautiful picture, huh?
Yeah, I know, but
you're sharing the original presentation. Please share the presentation mode.
Okay, which I'm doing. Just bear me a second, please. Let me do that again, and hopefully it will work.
And you are right. I mean, governance is the last letter, if you want, in the ESG, but it should be the first one, because with good governance defines everything else.
Yes. I think that should be better.
Let's see.
Not yet, Wouter.
No.
But you know what? Go directly on slide 2. You just click on slide 2.
Which you should see normally now.
No.
Doesn't seem to be working.
Wouter,
slide-
we see the PowerPoint screen of the, let's say, behind the scenes, basically.
Okay.
Maybe Wyndham.
And
could,
does that change anything?
Yeah, just you see the slide 2 on your right. Good. So let's go like that.
Yes.
Go ahead.
Well,
Let's go like that. Okay, so
go like
sorry
that.
for that technical issue. So I just wanted to come back to this 17 goals that were put forward quite recently, where you have a bit of everything, but there is some governance in there. I think an important point there to mention is this was rather established for countries than companies, but still we can use it as a broader context and definitely a source of inspiration. So I think I wanted to show this as it is the last part of ESG, but for me, this is still the big picture. We cannot avoid talking about this one. But then when entering a bit more on governance as such, I wanted to make a distinction in between regulated entities and unregulated entities. I'm mostly implicated in regulated entities, and we see there that supervisors and legislation push a lot of governance-oriented obligations to regulated entities and or fintechs. And then we could talk about board compositions, where we see that there is a request to have majority of non-executive board members in your board, that you should have independent board members for certain financial institutions, which brings, I would say, a way to better governance. I can state it like that. When we look into regulated entities, of course, also we have more expectations with regard to documentations, policies, and procedures. I'm referring here specifically to code of conduct, integrity policies, governance memorandums. Do I want to say that all non-regulated entities should copy this? No, I think they should use it maybe as a source of inspiration and think what they can use out of that into their internal governance statements and documentation. So there, that's definitely the message that I wanted to give. 3 other points is the 3 lines of defense principle, which is definitely something that is coming out of the financial sector. You should not copy it as such. It should be overshooting for a startup or a smaller institution, but you could have somebody who is a bit independent in your entity, who looks to another pair of glasses to your operations and ask themselves critical questions. So I do think that some of these principles can indeed also help your organization out of the regulated entity. And then I have put 2 other things, which is the sustainability charter and training and awareness. A sustainability charter, even within Lighthouse, we are thinking about setting up a sustainability charter. We are only 5, but I think we could bring a certain message to our peers, to our customers, to our value chain, and that is what we like to do. So we are building this as a really small entity, some kind of sustainability charter, not because it's trending, because we still believe in it, that it can bring value to our value chain upwards and downstream. So that's really the picture, regulated, unregulated. Then some points about some key principles for me when we're talking about governance, and the G is not for governance, but it's for good governance. And I think there a key message, and it's a bit trending, is the purpose-driven strategy. Always think about the why we are doing things, how do we position ourselves in the marketplace, and I think this should be reflected, the why and the purpose should be reflecting your strategy, your mission, and your objectives. And then, of course, once that is defined, you should walk the talk. I think the word greenwashing will come, has already been discussed previously in the E and in the S, but it's the same for the governance. Practice what you preach, and this should be definitely in line with the why of your company and with the purpose that you have designed, and this should also serve as a mirror to take your decisions against. If you have a new strategic decision, you can ask yourself, how does that correspond with my mission, with my strategy, and so on and so forth. And there in the bottom, I have given a concrete example. So the mission statement could be for an international law firm that they want to be the global leading law firm with a full service offering for public and private customers. I think it could be the mission statement of the strategy of a full-blown legal advice advisory firm. But I do think by rephrasing that at the bottom of this slide, that you want to assist your customers globally to achieve their objectives, and this through a full service legal offering in line with the ethical values of your company, you add a dimension. And I do think when people are thinking about strategy, putting forward mission statements, that they should think in these terms and try to add a layer of sustainability values in their mission statement. I think that is also a proof of good governance. Some other key takeaways that I would provide you with is define clear and transparent roles and responsibilities within your company. I think other speakers will more talk about internal governance, and this is really related with that. Define who can decide on what, but also find a good balance in between. We give you guidance to do something, but within that framework, you can take autonomous discussions and decisions, mostly decisions. So that's a difficult balance, but I do think that it brings added value to have a good governance also. Document your decisions. Even in regulated entities, very often the regulator asks, show me where you decided that, at what level, at what forum, and then the answer is blank. They don't know. We discussed it in a meeting. No. If it's an important decision, try to document it, that you have a trace of your decision-making process. That as a company, try to define some governance objectives and measure these. We want to have a board with so much minority groups by that date. Well, and in 2023, it will be like that. 24, it will be like that. And measure yourself against these. I think that you should be ambitious in your goals and report on these. It's better to be ambitious and not succeed than not be ambitious at all. So I do think that that's also a point that I would give at you or share with you. Think about your value chain. Again, as an entity, IT or finance, think about the complete value chain. Who are your suppliers? Who are you providing services to? And look into the fact that are these companies caring about sustainability? Are they practicing what they preach? I do think that there also you can put pressure on a bigger scale with regard to sustainability. And for me, it's a proof of good governance. And then as a last takeaway, because we are a bit limited in time, and I would like to respect the time of the other speakers, is also look always into yourself when you talk about governance as a target of an acquisition. If you would be an acquirer on the market, how would you like to see a company take over, the company that you would like to take over? How do you want to see it governed? With a good structure, with roles and responsibilities, with a certain level of documentation, with projects that are documented and so on and so forth. I think when you manage your company, it's a good pair of glasses to look through yourself and say, okay, here I need to pay attention to additional documentation, to additional decision-making, to defining roles and responsibilities. I do think that's a very interesting point of view. Look into yourself as a target of an acquisition. So in this really short time frame, I wanted to give you the key. Where does it all come from? The UN SDG, then some regulatory expectations with regard to board composition, training and awareness, policies and procedures, and then some key principles, what is my personal opinion, about how a startup, scale-up, fintech, you may name it, some key principles that they could take into account to strive for better governance. So that's about it for me today. Floor is open for questions.
Yes, please. Quick question, because we were talking about with Alessandra about what the points you just mentioned. But as you said, we have 30 plus people on the line. You're going to have some corporates, but you also have some startups. And I had my own startup myself in the past, and you too, by the way. Who's responsible of defining the governance? Is it me? Is it my board? I mean, we're going to have Monique will speak in 1 minute. Maybe she has more information regarding that. But from your point of view, I mean, it's great to define a good governance, 5 points, very clear. But who's in charge of that? Who is responsible for that?
I think overall, the board of directors is still there and is responsible for the strategy of the company and should make sure that there is an adequate governance at the level of the company. I should say that the initiative for the good governance should be with the executive management. They should put in place good governance structure and discuss this with your board. I think your board members might have very insightful reflections on your propositions. They have experience as other companies, and as an independent director, I do think that you can challenge then your executive company. But I'm still of the opinion that the initiative for good governance should definitely come for the executive management.
Okay, thank you so much. So let's hear from. Thank you so much. Very interesting.
I got a question as well, if I may.
Yeah, go ahead. Go ahead.
And Alex, if you're in charge, I'm not sure if already people put something in the chat, but Wouter, one of the topics that's very hot in the Dutch market, for example, is reward systems, right? So we have a very strong cap on rewards for people that work in financial services. I'm really curious what your take is on the role of rewards systems, basically, because I hear you talk about the targets, but not per se about how you get rewarded to making these targets. Could you explain something about your vision there?
Yeah, I do think that indeed what we call remuneration policies in the banking sector definitely have received a lot of attention due to the sale of not appropriate or not adequate products to customers. I do think that within the remuneration policy, there should be attention for ESG topics. So we could look into it from two perspectives, being, the remuneration should not be oriented towards financial goals, but should be broadened, I do think, to also ESG topics and so on and so forth. Where I said, from a governance perspective and even from a broader ESG perspective, as a company, small, medium, or large, you should put yourselves some objectives. And when in a bigger company, remuneration committees are defining on remuneration for a director, I think they should take into account definitely these ESG principles. So that is key in the decision-making process. Also at board level, ESG should be on top of mind, also at the level of remuneration.
Thanks, Wouter.
Welcome.
Okay, so I guess I'm next.
Yes, sorry, Monique. I have a problem with the screen today. Technically, it doesn't work. So thank you, Wouter. Very interesting, Monique. Thank you for being with us. So Monique is a dear friend. She's a part of the Luxembourg Institute of Administrator. So speaking of administration, good governance, I think she will have many, many more to say. Monique, can you share your screen, please?
Yeah.
Thank you. So 10 minutes, go ahead.
Do you see it in full screen now?
Not in full screen now, but we see your screen, the slide, which is good. So we can go like that, Monique.
Yeah, just
one slide after the others. It's okay.
Okay, so hi, I'm Monique Bachner. I'm a non-executive director and a lawyer based in Luxembourg, and I class myself as a governance professional. So yeah, I work quite closely with the financial sector in various different forms, with banks, startups, with different funds, etc., mainly on corporate governance. So I'm going to start just saying with what is governance. So Alex, can I just check that you do see the slides progressing?
No, you just have to click, directly on the slide too.
Yeah, it's in a different view, that's why.
Yeah, sorry.
It's very strange.
Indeed.
Do you see the slide now?
No, we are still on the first slide. And if you use your keyboard, maybe.
I'm using my keyboard and it's changing on my side.
I cannot see it.
Okay, it says screen sharing is paused. What about now?
Yes, good. What is governance, Monique?
Great. So what is governance? So I think all of you probably have an idea of what governance is, and it's about this balancing of different powers and responsibilities and relationships. And I think often it's important to stop back, whether it's corporate governance or IT governance or different types of governance, just to say, well, what are we governing and who are we governing for and how are we going about that governing? And that feeds into the question just before about who's responsible. So, I mean, there's the board governance, there's the company governance, and there's all sorts of different types of governance. So obviously in a company, it starts and ends with the board, but everybody has their role to play. And on the day-to-day, And on the sort of more granular level, policies and procedures, it will be the management who is responsible underneath the supervision of the board. So very much top-down approach. So on the right, you see sort of the sound cloud, a little bit of the different aspects of what's going on. So why do we care? We care about this corporate governance, which is sort of a new concept that arose in the 1970s, because we care about growth, we care about our stakeholders, we care about avoiding risk and avoiding crises. And the better way we can manage all of those different relationships and different interests, and that's why conflicts of interest is really a central term to corporate governance, the better we can focus on actually just running our company and growing our company and being more attractive to shareholders. I put on the slide there the VW example because it was always classed as bad governance within VW and is only very slowly changed since the crises. Today we're talking about fintechs. So I just took, search from the FT just yesterday. These are the two articles that sort of came up first. We've got Wirecard, and then if we join the ESG, as a whole, we've got the Goldman breach of breaking these pledges. Now, these shouldn't happen in principle, or should have less chance of happening if you've got good governance. And that's really sort of the starting point. So that different angle I wanted to take on that today was a little bit about DeFi and DAOs and the road to decentralization. I mean, I could have taken other parts of the technologies like AI ethics, which is a very big focus in governance as well at the moment, or governance of technologies more generally. But I think DeFi and DAOs, they're being talked about a lot. And they raise particular questions for corporate governance and for governance in general, because if we start from that corporate governance as the top down from the board, in a decentralized framework, who is in charge? So we've got these collective choices, which are supposed to be for the good of the group, the good of the product or the platform or the blockchain in question. But when we have these collective choices, we often have choices which lead to particular winners and losers. We know from behavioral economics that small groups making decisions make better decisions than the individual, but large groups making decisions tend to be mob rule. The loudest, most visible person is just followed, and you don't get actually a sensible, necessarily a sensible outcome. So when we talk about designing these new ecosystems and the governance of the new technologies that you are integrating into your fintech products, you need to think about the design process and the pros and cons, and also the winners and the losers when you're designing that, especially when you're talking about things like blockchains, which are supposedly immutable, and also where you've got automation making all of these processes so much quicker. So when things go wrong, it's much harder to catch them in timely manner. I won't go into this slide because I think I'm running over time, but basically this was an example, obviously, of knowledge and the fact that you have issues, of course, with free riders as soon as you get to things which are open source and how to manage that. So blockchain governance, if I just look at that example a little bit more detail, I mean, you see on the left there that it's very difficult to answer those questions that I started with. Who are we governing? What are we governing? And who are we governing for? And even if you look at each layer of a blockchain, you're going to get different answers. When you look at AI, you can even get to the same, because the person who's produced the algorithm might not be the same person or entity who's deploying the algorithm, which is again a different person who's consuming the algorithm. And how do you manage all of those processes to make sure that as you're decentralizing some of this power, that you're also maintaining that trust and the control in terms of how the product behaves. And then, of course, since I'm talking about blockchains and we always go on about decentralization, just also want to stress that, we talk about decentralization, we assume that it's happening, but actually at the moment, even the public blockchains are very centralized. And so that's something we really have to bear in mind when we start pretending or talking about them being decentralized. And of course, the corporate chains as well have a limited number of actors. And so decentralization in its corporate form is a sort of a nuanced topic. So that's really just what I wanted to touch on for today, and just sort of this idea of how is corporate governance evolving as we move towards decentralization and automation of very fast-moving new technologies. Thank you.
Awesome. Thank you so much, Monica. I mean, there are so many things, and Alessandro, it's so interesting, so many things that you mentioned, because you touch about, first of all, the role of blockchain in the governance. I mean, it would be awesome to have all countries govern with the blockchain, so everybody can be part of it. But you also mentioned something else that we never think about being in the tech sector, is not only governance about our own companies, but also about our products. Because the products we are building, and you mentioned AI, have a deep impact on the society and on the consumers. Most of the time, that's the problem. The biggest problem with AI today is the ethics, and it's based on the governance of those products that we build. Very interesting. You have a question? No?
Thank you.
Good.
Very clear.
So we will let Don do the question because he will have a panel afterwards, so we don't want Don to take too much of your time. Thank you so much, Monique. Where can people join you? I mean, you shared, we will put all the contact details of all the speakers in the chat afterwards, so if they can reach out directly to you.
Yeah, LinkedIn is the easiest probably in the first instance. Feel free.
Awesome. Thank you so much. So next in line.
Koen van der Hooijdonk.
Who's Koen? Because I don't know the guy.
Good morning. Good noon, everyone.
Is the CEO of the Connector.
Ooh.
Yeah, that's right. And thank you very much for having me today. I will try to make up a little bit in time because I see we're running a little bit out of time. So in sense of having good governance, I won't have any slides. So no death by PowerPoint for me. But what I would like to present to you is a bit of a provocative piece around governance, and then more particularly towards the governance of our own regulator. And this might, again, sounds a little bit provocative, but I think it's something that has to be said and has to be discussed. And what I'd like to particularly discuss is ESG MiFID. And for those that are not aware, well, ESG has come into place, but there's also an impact for customers or end investors in terms of reaching the goal 2050, having a climate neutral Europe, which I very much like. But in order to get there, some rules have been applied and also some regulation has come in place. And we would say that if you want to bring normal legislation into place in terms of investments, you would say that everything starts with companies. We have been talking about mid-sized company, big companies. Every company nowadays in the future will have to assure that what they do is within the ESG boundaries. So they have to report, which is a good thing because that means there is labeling happening. At the same time, you would say when companies do that, it's the asset manager who builds financial products based upon the companies. It's not on the company itself, but it's on financial instruments that are on behalf of the company, like an equity. So they start building funds, mutual funds. For those that are in Luxembourg, very common. You all know what this means. And it makes sense if that the labeling has been happening at the company level, then the fabrication is easy because you can combine the data that's coming from the organizations. Once you got a product that's been distributed, then you go to the distributor space. And this is where MiFID comes into place because it's the distributor that is distributing it to the end customer. And with MiFID, we try to protect the end investor. When we looked at 2008 better, this is when MiFID came into place, well, gradually came into place, but with the ambition of bringing transparency and protecting the end investor. So I think that's a logical chain. Now, when we look at legislation today, we unfortunately are actually mixing up the chain of events. So what we do, if we look at companies, then we talk about Corporate Sustainability Reporting Directive, CSRD, and that one is not coming first. It's actually SFDR, Sustainable Finance Disclosure Regulation, which is applicable for the fund investor, so for the asset manager, that's the one coming first. But that's why I want to say, I think it's good governance that you actually put things into order, because now the companies, the asset manager, are creating products, but they don't have the data of the underlying products that in their funds. So it's very hard. And on top of that, what you also put in front of the regulation for the companies, you have put ESG MiFID. So you will have to ask your customer, as of the 2nd of August, we'll have to ask all our customers, all that are in investments, we have to ask them what are their preferences. So in other words, you actually bring the client into the candy store and you ask him what type of candies do you want to have. But at the same time, it is very hard for the fund managers to define what are the candies, because the companies have not reported the candies, the ingredients of the candies yet. So therefore, I think good governance, it's all about people. It's all about making sure that people feel right, that they feel good in their company, and that you make strong things. And therefore, my plea was today, I think that the regulation, especially within ESG, may have done some wrong sequencing. And my worry is this really in the benefit of the client? So where is the good governance?
Interesting and provocating, as you said, but that's your style. And that's what I like. A few good takeaways, but we'll wrap up afterwards with Donna and the panel. But what you mean is beyond just, to be honest, and you are right, most of the companies we meet, and even our startups, everybody now is rushing to plant trees all over the world, you know, so you can offset your carbon footprint. Mm-hmm. But nobody thinks about the governance side of it. I mean, you mentioned the funds, it's totally different because it's an obligation, it's a regulation. But for usual startups, you should think about your governance as you think about planting trees to offset your carbon footprint. That's what you also said.
Yeah, I think it's practice what you preach. If we all go, actually Europe flies to the moon, right? We have been saying that we will be the first continent worldwide that will be climate neutral. And in order to get there, we actually put rules. But I think good governance is also to ensure that those rules are synchronized correctly, so that they don't impact the end investor. Because the purpose may not serve, the purpose may not be the leading thing in this. I think good governance is that it's all about the human person. It's about the end investor in this case. And that was my plea.
It's good. I like it. I like it very much. And I love it because it's becoming a burden. And that's what people don't understand. Governance is becoming a burden, not on the regulation side, but on the governance side. I mean, you have to fill all those forms when you want to set up a fund or even open a bank account. Because everything that's defined, it's about the process, is not about the client in mind. And I like your approach.
Okay,
would love to hear more during the panel discussion. Thank you so much, Koen. So next in line, and it's from Luxembourg, Bert, CEO of Governance. Speaking of governance, what a better name than having governance.com as your brand. Bert, are you with us?
Yep, absolutely.
Awesome. Bert, without further ado, please just share your slides. Can you share your slides now? Yeah.
Yeah, well, there's a setting problem in Zoom that doesn't allow us to go to presentation mode, but I'll just share the slide window. And
okay, sorry for that, but
normally you should be able to see it now, right?
It's awesome.
Good. Yeah, so I think I'm going to be saying a couple of things that the others have said as well. I think we all agree, and especially for somebody that owns a company called governance.com, I have to make the statement: governance is important. This is something that we've been saying for quite some time already. Even well before governance became, let's say, sexy and a la mode. I think everybody is focusing on it now. If you look at there's definitely growing interest in governance. It's consistently high. If you look at how people are actually Googling for things, you can see that apart from Christmas time, apparently, when nobody cares about governance and risk management, but for the rest of the year, I think everybody, really cares about this. And that's a good thing. You can see
I
it's
think it's
slightly
because
going up.
that's when miracles happen during Christmas. So you don't
Yeah,
need
well, I mean, if you compare it to more everyday terms like cat, I think people are 45 times more likely to Google cat than governance. So I think when we are talking about governance, because we're practitioners, we care about it and we think that it's at the front of everybody's mind, but it's not necessarily the case for everybody. And in Dutch, and I think probably in Belgium, we have the same saying onbekend is onbemind, which means unknown is unloved. And one of the problems here is that, everybody talks about governance, but very often the question is, do we really understand what governance really means? And in the most basic form. And so what I sometimes like to do is I like to write definitions. So like, how would you describe a word like governance? So in the most basic form, governance in a corporate environment at least means that you are establishing policies to maximize value and also to avoid risks in your organization. Then you actually apply those policies and you manage your organization in accordance with those policies, and you also monitor that everybody is following those rules, and that is working well. Because I mean, it's a dynamic infrastructure. It's not like you draft a policy. We heard before, I think Wout said it before, you draft a governance policy, for example, but it's not a static document. It changes all the time. You constantly have to monitor, is it still working? Do we have any kind of internal or external events that are impacting our policy, and should we adapt it? That is, of course, assuming that you're actually doing something about. And before, so if you want to give one word, so before we had a more wide definition, for me, if there's one word that is synonymous with governance, it's process. You have to have a process. You have to monitor the process, and this is where it typically goes wrong, because a lot of companies, they either don't have a process, or they pretend to have a process. And that, for me, it's even worse. And this is where, for example, things like greenwashing come from. So if we go back to the definition, in this case, greenwashing, I mean, it is conveying a false impression that you have a process in place or you have policies in place to ensure that your products are sustainable and that they're environmentally sound. But if you don't actually have that, and people imagine that you're a company that says, well, we care a lot about environmental issues and about sustainability goals, etc. And then, I mean, you get into the press with some kind of action that actually just proves the opposite. I mean, you're immediately, in the eyes of the public, you're immediately guilty. And so it's not just the regulators, it's the public as well. And so if you look at governance, so imagine that we would have a verb for that as well. So instead of greenwashing, I would call it golf washing. Of course, now my definition for this would be, it's a made up word. I made it up. Maybe it will become a verb. So I'll hereby claim ownership of that. But if it would be a verb, it would be conveying an impression to the market or regulators or auditors or your clients or your employees that you have a process in place to control your risks, and you don't actually have it, or you don't apply it. And this is where you can really start seeing very significant impacts on the company. And of course, we all know about the impacts of doing this, or actually not doing this. Obviously, everybody always talks about fines and sanctions. And so if you look at AML shortcomings, for example, if you have just in Luxembourg, if you have a minor shortcoming, it will cost already 50,000 euro at the very least. If it's a little bit more important shortcoming, it's easily up to 300,000 to 500,000, but it can go up to 10 million, and that's Luxembourg alone. And Luxembourg is not the highest sanctioner. But if you look at also, like for example, ratings agencies, if you look at Fitch, they wrote a report last year where they said stakeholders in general around companies are having a reduced understanding for people not having governance processes in place. And if there are shortcomings in governance that can, for companies that they cover, so there's usually listed companies, for example, it will immediately result in a decline of your credit rating. And a credit rating will immediately have an impact on your capacity to borrow and on the cost of borrowing. So it's not just that you get fined and sanctioned, but it's also that you can have other financial impacts, which are very important. Now, obviously, these days, when you have shortcomings in this space, I said it before, naming and shaming is the new rule of the game. So also regulators play this game because they know that publishing your name as a non-compliant company is much more effective than actually sanctioning you in itself. So, and if you have your name in the press, that will immediately create reputational damage and will cause you to either lose clients or reduce your capacity to onboard new clients. And so we're talking very often about big companies, regulated companies, but it's exactly the same for small companies. And that's where I come to the point number 4. If you have shortcomings in governance, so you don't have a proper process in place and you're not actually following that process, and that turns into issues in the company, you will very quickly become uninvestable. And this is something that for fintech companies usually comes up 2 minutes before 12 when you're trying to close a fundraising for the company, and investors ask those last, nasty due diligence questions. Can we see how you're actually operating internally? And so this is actually something that you really, really want to avoid. So that's why that's what I wanted to say about governance. What I feel is that both in big companies and small companies, we are often shocked at what we see in terms of, especially in regulated companies, at the limited operational control over processes that is in place. And I think that is really, really super, super important, that if you do a little bit every day and you put a proper process in place and you monitor it every day, it doesn't have to be a heavy thing, but it would avoid really, really big headaches down the line.
Thank you so much, Bert. Alessandra has a question for you.
Yeah.
Thank you for going back to the basics. My question is very simple. What governance.com does for all these challenges?
Yeah, so we do process automation, and so we make sure that when very often when regulators go into a company, they will show a beautiful visio, a process description saying, okay, this is our client onboarding process or a complaint handling process or employee offboarding process. And then when the regulator asks the next question saying, okay, show me how you actually do it, then it's not actually followed. It's just a pretty document that is in a file somewhere that's supposed to be read. So what we do is we bit by bit, we turn this into process automations so that it's actually running automatically and people are a little bit more guided in the work that they do, but also automate a lot of the work. Just screening if somebody is on a sanction list or a PEP list is not something that a human should be doing. It's something that the machine is much better at. So that the human can actually focus much more on the qualitative decisions at the end of the process.
Thank you, Bert.
Very interesting. Thank you so much, Bert. Yeah, I should have mentioned that Bert, it's a fintech that's based in Holland and in Luxembourg. But you're not yet part of Fintech Belgium. Not yet.
A call to be had.
That's only for the very, very successful companies, hopefully soon.
Okay, very good, but thank you. Very interesting to have you on board. And again, we'll share your contact details for people who want to reach out to learn more about the technology itself and how it can be leveraged for the governance side. The last but not the least,
Vincent Defoe from Transition, co-founder and CEO, who will be talking to us on about transition and how you can automate or create dynamic governance on top of ESG metrics. So Vincent, you can share your screen.
All right, hello guys. I'm just gonna try to see if I can share it in presentation mode or not. Do you see the full screen or not?
Not the full screen.
But we can hardly hear you. I
And
don't know.
the sound is worse than it was. Yeah. We can.
Hello?
Yes, you have to speak a bit louder.
I have to speak a bit louder. Okay.
Okay. Good.
So yeah, hello guys. I'm in a co-working, so people will probably look at me now what will happen, but I'm here to talk about a little bit our intro transition and how our company transition is actually supporting good governance in the field that we are actually on a mission. And the mission is to bring more AI-driven strategic intelligence into boardrooms of companies. So we're actually in the beginning of governance, how a good sound strategy can fuel a good governance. And yeah, we work for a lot of, we're industry agnostic, we work for a lot of finance companies. I have a lot of experience in the field of how do you integrate good long-term strategic planning into the DNA of companies, so really fueling governance practices. Now, for us, preparing for the future is not only of strategic importance in these uncertain, fast-moving times, it's also good governance. And a consulting company, McKinsey, has proven that if you are able to integrate long-term strategic planning into your DNA, that you outperform your peers on almost any financial metric, including company revenue with up to 47%. So from a good governance or strategic importance perspective, that's huge. But preparing for the future means that you need to anticipate that future. And there's even a term called anticipatory governance. And we're all about how do you integrate that? How do you anticipate change not only in the short term, so meaning 0 to 2 years or 3 years, which actually typically fuels strategic cycles, but go beyond that, go into the 5-year, 10 years time frame. And again, in this fast changing world, companies need to anticipate that change in those time horizons. So how do you do that? How do you integrate that more into the traditional governance practices, and that you have tactics and processes in place to really have that good connection between corporate governance and anticipatory governance? Well, in fact, it all starts with having hard metrics about this long term, about the future. So you need to quantify the future. Again, McKinsey has done a survey and they have proven that most C-level directors, they want more of these hard metrics to be able to help them steer their governance or steer their tactics and their roles, responsibilities, and processes. In fact, this is exactly what one of our biggest customers is doing. They're integrating this long-term strategic planning into their DNA. This is Hans de Kuiper, he's CEO. He says that that transition is a good guide to help them give that direction in this fast-growing world, in this ever-complexity changing world. And what we actually do for them is we've tailored we have a strategic intelligence platform which is able to monitor their future. So we're monitoring the future of finance in 2030. This means that we continuously monitor about 150 drivers of change, trends that are impacting them between today and 10 years into the future. And we can show them how these trends impact them. We can show it on a EU level. We can show it on an Asia level. We can even zoom in below finance, looking at differences, what's going on in banking, insurance. And this all fuels actually their governance in different ways. It fuels their 3-year strategic plans. It's used by their corporate strategy teams, but also on a local business unit perspective. So globally, all strategy and innovation executives use these insights to be able to set their North Star or their strategy, which they then break down into their governance practices. So how it actually works is that we're fully AI driven. So that means that we scout the world. We monitor global big data. That's all kinds of diverse data sources where we can find proof points of how trends are impacting companies. We then have our own proprietary AI, natural language processing, machine learning models, which is able to search all this data, score and predict trends and how they impact these companies. And this supports decisions in many ways, whether it's strategy, innovation, ESG responsibilities, risk, market intelligence, you name it. We have different use cases where our intel gives better answers to these specific responsibilities. And this is not a methodology, it's all automated. It's in our tool called Trend Tracker, which is basically an automated, efficient, cost-efficient way to be able to have this strategic decision intelligence in a continuous way at your fingertips. And what happens is, in this platform, you can basically monitor any team, whether it's finance, environment, societal, political, economical trends. And we'll give you the key answers, like what's impacting you, how hard is this trend hitting you, how fast is this hitting you, when will it hit you, and what action that you should take to be able to respond and anticipate that change. And we can zoom in, we can show a lot more proof points of this in a really transparent way, whether it's industry-specific proof points or innovation proof points, what's going on at a government regulatory perspective. It's all in this tool. And it's completely personalized. So usually what happens is you see how trends evolve, you need some concrete, tangible proof points. Well, considering that we're monitoring global news, we can really filter out the most relevant use cases and articles that really show how these trends are impacting you. So what I always say is you need to start integrating this anticipatory governance into your DNA today, because you need to know your future, you need to continuously monitor it, predict what will hit you to be able to anticipate. You also need to see how other companies, leading companies, competitors are dealing with this change. And most importantly, you need to know when and how to act to build good governance process.
Awesome. Thank you so much, Vincent. And we went beyond the regulatory obligation of governance. Governance can be even strategic if you have the right tools and the right information. I have to be honest. Not regarding the AI, the machine learning side, but predicting the future. I mean, and we've seen it for so many years now. Even the economist cannot predict the future. So do you really think that the AI can do it?
First of all, we don't predict the future. There isn't anything as the future. The future isn't set. So what these AI models can do, they can look at patterns in the past and they can predict probable outcomes. So what we do is we look at different versions of the future and we look at it from a probabilistic way. What is the chance that this will happen or that will happen? And what if we integrate a certain event into that scenario? What will happen then? And so it helps. It's an AI model that helps make a better, clear picture of the future, but it's not predicting the future. You still need people in the business, experts, who look at these insights and who basically then have a better means of deciding what they need to do to anticipate. But we don't predict the future. If we could do that, I wouldn't be here then. I would predict stock markets or something.
Good, very interesting. I mean, Bert should be interested by that, and Monique. It's a personal, again, on a personal note, I always thought that AI will replace God. I know that it's problematic to say that, and even worse in a public. But then, yes, indeed, only God knows what will happen. And if AI is replacing God, AI will know. Anyway, so guys, I'm finishing my ranting. She doesn't agree. Thank you so much to all those speakers. Don, I leave you the floor for the panel discussion. Thank you, guys.
Thank you very much. I think really interesting the different perspectives that we got just now on how you could actually deal with governance. Very different perspectives, and I think it definitely good food for thought. Some of the thoughts in any case came to me is like so what I learned a little bit is about we probably should actually look at the value chain by looking at the values that all the parties in the chain have, rather than just the value that's being transported through the chain. And I think that's in any case a really nice one that both Wouter and Monique refer to. I think it's quite important that we have a look at that. And so I think already, if you look in financial services, that a lot of parties are actually not that they don't have a very good oversight of all the parties that are actually part of their value chain. And I think especially then if you would actually have the conversation about sharing values, you probably would end up in a new turf that I'm not sure that everyone's investing enough time in. I think Koen's perspective is also really interesting, challenging a bit. I think the societal role that financial services has to a certain extent, because I think that's one of the very strong balancing acts at the moment where you could argue that you should do everything for your customer, but there's actually a large portion of society actually who doesn't agree to that, who wants to make sure that you look as financial service company, you look after societal targets, like, for example, anti-money laundering, or currently, for example, setting up sanctions, which might not align with your customer interests. So quite interesting, I think, how that challenge is also, it's definitely worth the debate. I think Bert also had a very strong, interesting perspective, where I think he referred a lot to where the financial services industry is being obliged to look at governance, but it actually takes away the complete drive of wanting to do something about governance, which is also a strong challenge in the industry, because if everything's being prescribed, people stop thinking. I think Vincent had a very strong, interesting perspective on the short term versus the long term. We should have a look at. And maybe, but what I want to ask all of you, I think, to start with, because I think we didn't address that well enough. Do we actually see the way that we embed governance and that we set it up? Do we see a role for technology to get better at that? I think Vincent showed us what, let's say, more data and more input you could use to make better decisions. But do we actually get better frameworks, automated processes? Do we get the right nudge at the right time to do the right things? Does that become part of our data or of our software stack? Or is that really based on, still compliance officers, agreements, and everything else? Just curious about your take. So maybe let's start in the order of appearance with Wouter. What's your take on this?
Thank you, Don. I think it's definitely a good question. I think we are moving in from governance with the old school approach, with a lot of documentation, paper, and so on and so forth. And we should move forward. I think there are a couple of initiatives, and I'm here talking about more like at board level, how can we organize that decision taking is there, that we have the opinions of the ones and others. And I see there more tools like maybe Diligent Board. I don't know if some of you people have heard about it. It's a quite good tool to document meetings, board meetings, committees, and so on and so forth, and to have minutes over there, action tracker of decisions taken. It's a small tool, but I think it brings value and structure in board preparation and decision making. Besides that, real technological insights like Vincent, I would like, I'm quite interested in to see a bit more practical how it works. I have not been confronted with it. So I'm also eager to see how that could bring value to a boardroom and to a governance perspective of the board.
Yeah, thanks. Monique, what do you think?
Yeah, so I fully agree that this is something that really can help governance a lot. What we've seen in the first stage is really what I'd say, baby digitization. Basically what was in paper is now in a PDF, or it's stored in a share file location rather than on somebody's local drive or in paper.
Yep.
And the next phase is really about making that a smarter process. And this is what you heard from some of the products who are speaking. It's about adding value to that process rather than just doing what you did before in a digital manner. And that value, like if we're talking about the theme, which is ESG, a lot of the ESG data for investing was really difficult to collect in the past. Now we have this data explosion and we've got too much data in a way. But now we need to then, curate that, use it properly, and make it add value and have smarter decisions. The other thing, just talking about the boards specifically, there's been some trials on things like AI directors and, Sophia the robot. Mm-hmm. I don't think we're getting that anytime soon, but I do think that any board now that ignores the new technologies, ignores the value, the added input from AI and the other technologies, actually to augment its decision making, to complement it, whether it's in its KPIs, whether it's in the strategy review, is probably going to be veering in the negligence sphere in the future.
Yeah, very interesting. I think as well. I do believe that technology can take actually quite a strong role. There's some interesting tools I see being rolled out actually to, for example, operationalize. For example, using the OKR method, right? So that's the operational key results method, which is, I think it's operational strategy and governance, but they basically have ways of actually taking that down, let it trickle down completely through into the veins of the organization, so that everyone actually is aligned with the company's mission and goals completely. And I think I don't hear people in boards talk enough about these kind of tools as well, which I think could be very interesting as well, where you could actually connect, right, from your values and your mission down to day-to-day operations. And I think that's a really strong one to actually support governance in that sense. Koen, what's your take on this? Where do you see this heading?
I think it's a very interesting question and some interesting answers as well. But I think governance for me, it almost immediately reflects like stomach feeling. It's something that you should do as good business practicing, which is obviously helped by tools and by all best practices that we all know. And I think where technology can come in, very from the basic level, is evidence-based. This is where we're heading, because you practice what you preach. So technology will help you to capture all the good steps that you make. And now we have been talking also about AI, which helps you to predict. I would like to put an additional layer to that. I think it's to discover unconscious bias, because it will help us when we know our stomach feeling is there. It potentially helps us to identify in which areas, which regions, which people, which behaviors we're not acting the way we want to act as a company or as a person. And the tooling, the data, AI can help us to unravel this.
Yeah, I think that's really interesting indeed. It could basically be a way of actually asking us some nasty questions as well about how we're doing, right? In embedding that. But the data side is really important as well. Thanks, Koen. Bert, how about you? What's your take on this?
Yeah, so I have a slightly, a little bit negative view on governance in general in the industry, because I mean, what Monique said before, I mean, you had paper before, now you have PDFs. For me, PDF is paper. It's the same thing. It's just a digital version of the same thing. And it hasn't really changed. I mean, you have this famous setup of digitization and digitalization. Digitalization means that you start doing things differently using digital information. And I think everybody's still stuck in the digitization part, saying, yeah, we have now a PDF that you can fill in. Yeah, but how does that help you to get better at what you do? And I still believe that a lot of the governance initiatives in large and small companies are still very much driven about cover your ass, and that is not great. You're not supposed to do this to avoid the fine. You're supposed to do this to get better. And that will have an impact on the bottom line, the top line, and everything in between. And so still today, if you look at most organization policies and procedures, for example, they still have thousands of pages of procedures that are all written in a way that if the auditor comes in, that you can show how fantastic you thought about this process, but it's not, a lot of people don't make the translation to actually doing it. And the action is the only thing that counts. You can have the best designed processes and procedures in place, but if you don't actually follow it, it's very, very important. And at the end of the day, it's the directors, like Monique said, it's the directors that will be held responsible also for shortcomings. And so it's very important that still this industry, regulated and unregulated, big and small, still makes the translation saying, let's use this technology to become much better at this. And I think that there's still a lot of work to be done there.
Yeah, no, I can relate to that. I think, but that's what I referred to at the beginning as well, is that it's really different for the industry that's being pushed around to write down these processes in particular, right, and get them signed off, rather than everyone's actually asking, like, what are people doing on the floor, and how are they aligned with what the values that you show and the outcomes that you preach? Is that actually working? And technology could play a role there, especially, I mean, if you look at, of course, the enormous amounts on compliance that's being spent these days, you could argue that there's some efficiency to be gained. But indeed, we're not there yet, because moving around PDFs is hardly called efficient.
Maybe if I can react to one thing that you said before. You said, you made the kind of statement of like treating people like idiots, and I think that is, if you are too much trying to plug everything, you still have to let people use their brains. And if you want to get people to use their brains, then use the technology for all the other stupid stuff, but not for the important decisions. And don't try to streamline that too much. That is why the human is still part of the process.
Yeah, but I think one of the challenges in the industry is I think that you see that there's a lot of drive from government as well as supervisors to actually have really nitty-gritty control over processes or certain outcomes, which will stop people from thinking about it themselves, right? That's one of the big challenges. I think you need to have some trust in the system, and that you basically can stop at a certain level of guidelines within which people will have to figure it out themselves.
Totally.
Yeah. Vincent, so I think you're really much on the data side here, right? So you basically try to look at all the external influences on this. How do you see that there's increasingly possibility to actually use that data also within software and automated processes within organizations to let it come to life?
Yeah, absolutely. Yeah. First of all, when I think of governance, I always have this idea about governance equals less change or slower change, or because you build in these tactics, these policies, these processes that at some level you can't transform as a company as fast as you would like or you would need into the future, because you have all these different steps at each part that need to happen before you can change something. And so that's where I think that if you want a good governance, for me, a good governance should be a balance between not too much of policies and processes, but also let's bottom up, let people think about how to create agile ways of working and understand how technology, how data can play a part at some steps of the corporate value chain. And for me, that would be good governance, that the data is there, you can use it. The technology is at hand to be able to efficiently create processes, automate stuff that otherwise would take you more time from an operational excellence perspective. So why not use it, but use it carefully and try to have a good balance between policies, procedures, processes, or what you need to do from a compliancy perspective, and an agile way of working, and try to always have that mindset. And this is something now, as being a scale up, that we are really careful about. We have the mindset of let's automate everything, but at some point in time you grow as a company and you just need a couple of procedures to put in place to be able to manage how you grow and grow in a controlled way. This is one thing. And otherwise, we see that if we want to work for a couple of bigger corporate international clients, they expect that we are compliant with a couple of governance frameworks or compliancy frameworks like ISO, SOX, these kinds of things, which makes it really impossible for us to stay a scale up and stay ahead of the change. Hey, we need to be early adopters. We need to lead how in our specific niche or core. But becoming compliant to all these frameworks just won't be able to allow us to change as fast as we want it to be. So it's like a paradigm situation where you want to work for these companies. They push these policies on top of you, which doesn't allow you to scale and grow as fast as you would like. So for me, it's two things: find a good balance and use technology, data, insights, whatever that's there to use, and use it to be able to build an agile governance structure.
Yeah, no, that's recognizable. And I think it's definitely one of the challenges for smaller companies entering the financial industry, that at some point they need to work together with incumbent players. And so that means that they will have to comply with all the rules and regulations, procurement processes and everything else that's being enforced on them by the larger players. And to a certain extent, that's I think also how we want to work in the sense that you would want there to be guidance from the traditional industry also towards newcomers, at the same time, you see indeed that it can be suffocating for younger parties to actually be able to comply and play along, which could be a very big hurdle for entry, basically, as well.
Then we have a question from Monique. I mean,
yeah, I just actually wanted to add that and just say that, I mean, we're talking about governance and good governance and compliance and different things. And if you have a governance or compliance system that is holding you back, then it's not a good governance system, because it should be a framework that is enabling you to scale and grow with more trust and better, and actually enable that growth. And so we're probably looking at confusion between what is the role of policies and procedures. It's not to stop you from doing things, it's to provide that framework. So if it becomes, if it's holding you back, then it's not done right.
Fair point. Fair point. But probably in a lot of cases, it's not done right. I think that's why we're actually talking about this at the moment. Yeah. Yeah. No, fair point. Alex, you had a question as well?
No, I just saw Monique raise her hand, but Koen also raise his hand now.
Yeah. Thank you, Alex. No, what I take away today from the discussion, it's I came into this discussion and I had my own view about governance. And what I hear is that we all have a different view, and it came back to what Monique was just saying, enablement. And I think you fill in yourself how or what you want to achieve and how you do it. What governance in a more compliance sense means, or a more industrial way would mean, is that it brings you quality standards. It can help you as an industry to move forward to a certain goal, and that goal can be ESG, but that goal can also be not making any operational mistakes. So I really appreciate this discussion, and it really gave me a couple of new insights on terms of this governance and how it is enablement. At the same time, it also brought me some confusion, because we've been using the word governance for compliance things, for for best practices, for a lot of things. So maybe some of us can you, and I know Bert made a first attempt, but maybe can you repeat the definition again of governance?
Yeah, absolutely. I mean, it's all about policies, putting policies and procedures in place, and running your company in accordance with those policies and procedures, and monitoring it. But I think that the issue is that people have this sense like, if you don't have 200 procedures, you probably are not very well in control of your process. And it's not about that. It's like, for example, it's the same thing when we do a procurement due diligence for one of our clients, usually financial institutions. They, already 5 years ago, they would come to us and say, okay, can you send us your anti-slavery policy? And I was like, really? That's the thing that you're most worried about when you're dealing with us? You're not worried about, IT security and operational controls and things like that. And I think it's become too much of a check the box exercise, saying if you just have those policies in place, you're good. But it's not about that, and it just gives you a false sense of security. And I think you talked a little bit about MiFID before. It's the same thing there. If you do too much of the superficial packaging around it, but you don't do anything inside, and at a certain moment you find out it's an empty box, and everybody's going to be disappointed. And that for me is a much bigger risk than not having any policies in place.
So what you're saying, Bert, is that there should be a collective belief in order to make policies, rules, and so on and so forth.
Yeah, absolutely.
There should be a collective belief what is right.
The famous Simon Sinek question starts with why. Why are you doing that? Any kind of policy that you have in place, why do you have it? Why do you have a code of conduct? Why do you have a gift policy in place? Why do you have all these things? You're trying to avoid some risk from occurring and protecting all your stakeholders. And so if you don't know why, then you can start determining, okay, how do we actually go about implementing something that avoids that from happening concretely?
Yeah, no, that's a fair point. And that's, I think, one of the most challenging questions, I think, that we should ask much further, much more often, I think, in the industry as well. And that very often, I think currently it is because we have to, rather than because we want to. And I think that's one of the challenges definitely that we're looking at. One thing, there was a question also in the chat on how to basically govern the decentralized world. I think it was already interesting what Monique was explaining about that. It is quite challenging because I think our legal framework is really not fit actually to look at that at the moment. What is the best way to engage all the stakeholders in such a way? If you look at blockchain like projects or with DAOs, any thoughts on that from anyone on what kind of governance there could actually work? Maybe also to actually overcome some of the barriers with the traditional legal system and the regulatory world as we know it.
Well, I can kick off if you want.
Yeah. Yes,
yeah, so as you said, the legal system at the moment is not really adapted for it. And for the viewers, the reason for that is largely because it is based around corporations or some sort of legal entity. And so in most countries in the world, you will end up being some sort of unincorporated corporation or association. And because you're not incorporated anywhere, it means you're incorporated everywhere, and you end up with unlimited liability. And when you say those words, unlimited liability, that usually should scare people. And that's why we have used corporations, generally in the past. But it's really interesting, question. And I think it's really valid for the future. How are we going to get there? I'm not convinced that the current decentralized projects do always engage all stakeholders. We see whether it's at a political level, whether it's a blockchain level, whether it's a project or a community activity, we have a few people who are dominant and who participate, and they are taken to be sort of the stakeholders, but they're usually a very small minority of those who are actually involved or invested in a project or living in an area. We know that just with elections, we struggle to get people to vote. So in normal elections, delegating a vote would be called, corruption or vote selling and buying. In blockchains, we're saying this is like the new thing in governance, but we're selling our votes effectively to other people. So there is a space for much of this, but it is difficult to get that balance right. And we've seen with the open source movement over many years, which is a little bit akin to some of the decentralization trends, and also see all the stuff from Elinor Ostrom, that we tend to still have somebody or a person or a group who's perceived as the leader, and we follow the leader. They have this implicit authority. And so how do we make sure that those who are the leaders are leading for the good of the whole, for the good of the society, for the good of the stakeholders, and not just, not managing conflicts of interest and managing for their own good or for their bro-mates or, whoever.
Yeah, no, fair point. I think it's quite a challenge still at the moment. It all starts with having interest transparent and aligned, I think, if you want to collaborate. And I think that's where it often also becomes shady, because not always interests aligned, and that means that people then don't want to be transparent about it. And that's when that's becoming harder and harder to fix. Any other thoughts on this topic from any one of you?
Yeah, maybe Don, if I may just come back maybe on what was discussed previously. I think there's a lot about top management, the leadership top management shows. If the top management is not organically or naturally occupied with governance, it might be your compliance officer doing so. And that's not a good thing. And I can speak about experience. I'm a certified compliance officer myself. If you leave governance up to the compliance officer, it will not turn out well. I think the leadership should definitely, with your directors, your execs and non-execs, that taking the lead in governance, and may be assisted by compliance to bring intelligence, to cover the regulatory part of it. But if you have a true leadership style in our management board, it will come organically. And that's the best way forward, because it will then, I think, be drilled down throughout your whole organizations in the different senior, middle management levels. And that's the way we want to have it. But what I see from experience is that leadership still in bigger financial institutions is missing. And it's frustrating even for myself. It's like the old school financial management style with a lot of focus on financials and not about the whole value chain, not about all the stakeholders. Short term, indeed, short term. And I think there makes a difference. If you have a true leadership style at your top level of your organization, I think organically you will have a lot of more of attention about governance, and it will be translated in your whole organizations. But don't let your compliance officer define your governance. I'm talking against my own boutique, but I'm definitely convinced about it.
Yeah. That's interesting that there's also been a book written about this by a Dutch writer called This Can't Be True, about the financial crisis and how it, in his sense, it was largely triggered by the fact that we started listing banks on public markets with mercenary management rather than ownership through partnership as it traditionally was shaped. So that indeed all the management would actually have a long-term perspective with the company that they would manage, rather than, you know, a quick hit-and-run bonus management style as we see very often in public companies. So I think that aligns a lot also with your vision here. All right, really interesting, I think. But I think we should wrap up towards an end. So what I would want to ask all of you actually is, and I think especially Jen, looking a bit at also the younger companies that we have in our midst, it's really a big struggle because, you know, setting up good governance, it has to be intrinsically well motivated, but at the same time, it does require effort and time that you have to invest in it, which could also be spent in building your product, hunting customers, right? So I think this is always the challenge for a lot of smaller companies to deal with. Would you have an advice for them on, you know, where to start and yeah, you know, basically some of the key elements, one of the key elements perhaps that you would want them to focus on first to basically start their good governance process. Wouter, can I start with you for that?
I would step back again to what I said also briefly in my presentations. I think you should really ask yourselves, why are we doing this business? Why are we in here? And there, put yourselves a couple of objectives. How, and then only start thinking about how are we going to do that. And if you ask yourself those two questions, a lot of why, and a couple of times how, I do think you think already quite a lot about your governance. And if you're then drilling this down, as I said previously, throughout your concrete objectives, your decision making, your conflicts of interest. I think Monique spoke about conflict of interest. It's key. I do think so. I think in a natural way you will come to a better governance, and therefore it's people do not think enough about the why in their strategy, in their perspectives, about the purpose. And I'm still convinced that it is the starting point of a lot of good governance that will follow out of that.
Great, thanks a lot, Wouter. Really useful, I think, just to have that perspective. Monique, how about you? Any last words on this? Yeah, so I'll focus on the board again. I would say, yeah, perfectly, yeah. Start with why before you go into how. But the viewers probably want to know some tips on how to get started on their how. I would look at things like the OECD principles on corporate governance, and these are also translated into your local stock exchange governance code. Have a look at those, have a look at one or two companies that are listed, how they have translated that, because they will publish all of their policies and procedures and governance code, and then adapt from there. You know, we talked about proportionality at some stage, about a small startup will not have the same depth and detail in all of these things, but these will give you the idea of where to start and then strip it down a little bit. Thanks. Thanks, Monique. Also, in addition to that, there's actually also a couple of startups and scale-ups that have published their sort of internal code of conduct, which some of them keep really lean and practical. That might also be worthwhile to just Google around for that as a useful start. Thanks. Koen, how about you?
Oh yeah, thank you very much, Don. For me, if it would be really an advice to all the startups and scale-ups, I think the thing is dare to think big enough. And if you think big enough, then you think about how you would expand in different countries, how you would scale, how you would move on, and how you would keep your business in shape, not only today but also midterm, long term. And that will automatically forces you to think in governance sense, because you cannot just only drive by just good luck. It needs to be well thought about. Yeah, there's some think process. So think big enough.
Great. Thanks, Koen. Clear mission there for everyone to think big. It's definitely a good one. Thanks. Bert, can I ask you as well to add?
Yeah, I agree with the think big. I would add to that, start small, because you do want to think big, but you need to get started somewhere. And I think very often people don't move on this because they overcomplicate things. And so in looking into everything that you need to put in place, it's good to make this world map, but then pick a territory and say, I'm going to focus on that. For example, if you're a company with 100 clients and 1 shareholder, probably shareholder governance is not your immediate focus. But if you're 100 shareholders and 1 client, it's the other way around. So you need to see what kind of animal are you and what are the things that might impact positively or negatively your company and your stakeholders the most, and focus on that. And just get that done and then move on to the rest. Because over engineering and beautification of the governance process doesn't serve anybody. It's one step at a time. That's what I would say.
Thanks, Bert. I think it's really nice that we're block by block handing out some really useful tools, I think, to build your governance. So let's see what Vincent has to add to that. Can I ask you, Vincent?
Well, I will also say think big, and that might be the thing that everybody needs to take into account then. Yeah, from my point of view, as a scale up, it's indeed eating my own dog food. So thinking big, really having our North Star vision, translating that back into clear goals and clear responsibilities within the company. And as a CEO, for that point, I really have a more of a tendency towards self-governing entities, where the people in your company, you trust them, you let them self-govern their own work. They know where they want to go, they know where we need to go as a company, and then really manage the boundaries between all these entities and the responsibilities, and really seeing if they're not overcomplicating everything. And if they can automate it, that they just automate it to keep it lean and mean and agile. And this is how I'm managing my company, and I think a lot of bigger corporates can learn a lot of the self-governing principle of a company.
Yeah, great point indeed. I think indeed, if you actually ask yourself the right questions about why, and you're actually able to talk about that as well with your organization, then it also becomes much easier for people to actually align with that by just using their own brains instead of having to tell them exactly what to do. Yeah, great. I also saw an interesting tip by Vanessa in the chat, so I want everyone to encourage everyone to check that out. But I think for the rest, we're almost running out of time, so I'd like to hand it back to the studio in Luxembourg.
Thank you, Don. Thank you. Awesome panel, very interesting conversation, and a lot of insights in this. I mean, Vincent really touched my heart with companies who have a good governance are 47% more profitable. And Vincent, this is music to my ears, so thank you for that. Don, what's the call to action? So on the left side, guys, March 25th, we have our usual FinTech Friday. I guess information is on our website. Please come, have a great party with us. It's going to be next week. What's going on in Belgium?
Everything is on fintechbelgium.be. We have lots of meetups coming up, and the next really nice one will be on the 12th of May, and we'll be talking on how to grow internationally, a topic that will be interesting for lots of startups and scale-ups. So you're more than welcome.
Awesome, register. Don, I hope you didn't left. What's going on in Holland? Any events coming up?
No, nothing going on. No.
Money 2020.
Great stuff coming up. We've got Money 2020 coming up. We've got DIA, which is the insurance conference.
DIA, yes, good.
We've got of course Amsterdam FinTech Week in September. So we've got a lot of opportunities where you're definitely all invited. I'd love to meet you all in person there. And of course, in between, those are some of the larger events. We have almost something going on every week. So please check out our website for all the stuff that's going on where you're happily invited.
Awesome. Thank you so much. And I would like just to thank again Alessandra for making the trip, coming to our studio. Thanks, Don, for the panel discussion. Thanks to all our speakers. And also thank you to all the people around us that are working to make those events happen. Ono, that's with us, in charge of Ono. You can switch on your cameras. By the way, everybody, please switch on your cameras so we can take a picture. Ono, thank you so much for your great work, man. From Holland FinTech, Patricia, that's not with us. No. She's on holiday, so hello, Patricia. Thank you to Wyndham, coordinating everything with San and Elsa. And thank you to my team, Anthony and Chris, for the promotion and setting up the studio. So guys, if you can switch off on your screen, we take just a picture for the social media and tag you all. Quickly, we still have 30 seconds to go. So that's when you check who's really in front of the screen and listening, you know. Still a few more people to switch on your camera, please. Elsa, Paolo, Ron, Nathan, George, John, Deborah. What? Not. Yes, please go ahead, guys. Don't be shy. I cannot take a print screen. Yes, George, Paolo, Deborah, Dirk. We are not just 24, but at least it's gonna be a great picture on social media. Thumbs up. Thank you, guys. It's been a great session. See you very soon for the next one. Thank you. Take care. Bye bye. Enjoy the rest of the day.